a clear sign that this market has gotten healthier. How about the fact that mergers are happening again? Take what happened Tuesday morning when Quintiles Transnational Holdings, the world's largest contract research organization, helps drug companies manage their clinical trials, reported a good quarter, and then announced that it was combining with competitor IMS Health in a $9 billion all-stock merger of equals. Now, Quintiles and IMS are in different businesses, but they complement each other. Quintiles is the company pharma and biotech firms go to when they want to outsource their clinical trials in order to save money and ensure that they get quality research. IMS, on the other hand, is a provider of information and technology services that help healthcare companies measure and improve their performance across a variety of areas, from treating diseases to controlling costs. The combined company, which will be called by the name Quintiles IMS Holdings, should be able to use IMS Health's tech savvy to improve the design and execution of Quintiles clinical trials. From a financial perspective, Quintiles says the deal should add 100 to 200 basis points of incremental revenue growth while creating $100 million in cost savings over the next 3 years. Plus, they expect the merger to be additive to the combined company's earnings per share by sometime next year. There's just two problems. First, many of the analysts who follow the stock hated this move. Since the news broke on Tuesday, Quintiles has been hit with 4 downgrades. Stock's been slammed. Second, the man we know as Quintiles, Tom Pike, won't be the CEO of the combined company. He's taking the vice chairman spot, while the CEO of IMS takes the reins at the new entity. So why does management believe this is the right move? Let's take a closer look with Mr. Pike, the CEO of Quintiles Transnational Holdings, learn more about the transformational merger and his role in it. Mr. Pike, welcome back to Mad Money.
Hi, Jim.
Good to see you, Tom.
Great to see you.
Now, just going to start right at the beginning. You know that you've been a huge win the whole time. We had you on when the first came public. It's just been nothing but net. So you know that when we saw that you're not going to run the combined company, we were disappointed.
Well, thank you for saying that. You know, these are difficult decisions for boards to make, but what I'm excited about is what we can do together. You know, we are the leading company in terms of helping pharmaceutical firms get great medicines to patients, and this is going to help us do it faster and more effectively. So we're really excited about what we're doing for patients.
Well, then why do you think, for instance, Citi, which had been a big supporter, we always looked at the research, we are downgrading Quintiles to neutral from buy, new price target, merger of equals announced yesterday morning, and then it says that with the acquisition may drive synergies in the intermediate to long term, we see limited short-term upside with greater near-term integration risk.
Yeah, I guess we just don't see it that way,
Okay.
Jim. You know, it's fascinating with the opportunity here. If you think about the clinical trial process, and we are the best that there is at this.
Yeah, we said that
It
repeatedly.
is still a relatively manual process. And what we have with the opportunity with the great information services provider, you know, they're really the big data company, the original big data company, IMS Health. What we can do is understand much more effectively how to bring timelines forward associated with recruiting patients, finding the right patients faster, finding the right doctors faster to do the investigations for patients. Basically, together, we can bring medicines to market faster, and that'll be great for our customers.
That's what I thought, too, as soon as I saw the headline. But then I read through your quarterly release, and you did have a book-to-bill, showing the book, of 0.9, which is the lowest you've had in 2010. So some people told me, well, Jim, they're selling because they don't have the growth they used to have.
Well, that's just not right.
Okay.
Essentially, right now, what we did say in the quarter also is that we have the largest pipeline in product development that we've ever had. And in addition, we had the strongest April since we went public. When you're in a business like ours, it's not a business of little widgets. Sometimes there are multi-$100 million clinical trials, and you just can't always get those to get closed exactly on time. And so we had a couple of those slip into April, and in fact, all the awards that have taken place in April, we've closed.
Okay.
And so in that sense, we feel very good about where we are.
All right, Tom, there was an amazing study that you alluded to, a tough study, which showed how expensive it is and how long. Maybe you can tell our viewers, because I felt that as soon as I saw this combination, maybe that could cut down on the time and the expense.
Well, that's right. If you look at what's happening with clinical research, and again, we're at a time right now where we have unprecedented medicines that we need to get to patients as quickly as possible. But right now, we're exceeding by as much as 100% the planned timelines, because it's becoming more and more difficult as there's a crowded market for products and less clinical investigators. It's becoming more and more difficult to meet those timelines. And so with this combination, with the enormous data that IMS Health has, with the tools they have, the tools that we have, putting them together, it gives us an opportunity to really bring those timelines forward. And a couple of months of bringing those forward for a drug company could be $10 million, $50 million. And frankly, there's very little integration risk. Because they're the leader in information services and we're the leader as a CRO, what we're really doing is just informating that process of running a clinical project, and there's very little integration risk.
Wait, I can tell you, I was somewhat concerned about IMS because I spent a lot of time studying Watson, the IBM computer, because they tell me that they are the company that can do big data analysis faster than anyone, and they are targeting the healthcare industry, seemingly targeting IMS. Is that going to be a powerful competitor to you guys?
Well, I will say they definitely can play chess better than we can. But that being said, I think we really are the leaders when it comes to big data for healthcare.
Right.
We have a company that's been in the business over 60 years. We've been in the business 34 years. We have over 1,100 medical docs, 1,050 PhDs focused on life sciences. They have the biggest lake of data that there is. And putting those together is going to create great outcomes for our customers. One thing I might add is all week long, the CEO of IMS Health, Ari Buspig, and me and I have been getting responses from customers, and the responses have been great. They get it. This is really strategic. This is what we need to do. This is what we've been trying to do. We've even had a couple of customers that we don't work with very much today, or very large pharma firms, say, come in. We want to meet with you soon, talk to you about what you're doing here. So to be honest, it might be, we probably shouldn't surprise the analysts, but I don't know quite how you do this otherwise. But we've got a great deal here.
All right, well, we'll miss you as vice chairman. I know you won't be speaking for the combined entity, but you did a great job for all the people who watched the show. That's Tom Pike. He's the CEO of Quintiles Transnational Holdings in a transformational merger that I liked, but I'm not an analyst covering the stock. Mad Money's back after the break. Thanks. Thank you. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.